Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is the five tax deductions that most of the entrepreneurs miss in 2025. So here we will discuss the 25 popular tax deductions and the tax break for 2024. A deduction cuts the income you are taxed on, which can mean to lower a bill. A credit cuts your tax bill directly. Learn more about tax breaks and write-offs and how to claim them. Tax breaks are generally broken into two major categories: tax deduction and the tax credits. As you examine programs that could potentially apply to you, it's a good idea to know differences in how each benefit works. In short, tax credit give you a dollar for dollar reduction in the amount of tax you owe. A tax deduction, also sometimes called a tax write-off, provide a smaller benefit by allowing you to deduct a certain amount of your taxable income. Here are some of the most popular tax breaks and links to our other content to help you learn more. 25 popular tax deductions and the tax breaks. The tax break below apply to 2025 tax years are: first is the child tax credit. The child tax credit (CTC) is a tax break for families with children below the age of 17. For the 2025, the credit is worth up to $2,200, with the $1,700 being potentially refundable. To qualify, you have to meet certain income requirements, and you or at least one spouse if filing jointly, and your child must have a valid social security number. Then the second point is child and dependent care credit. The child and dependent care credit (CDCC) is meant to cover a percentage of the day care or the similar cost of the child under 13, a spouse or parent unable to care for themselves, or the another dependent, so you can work. Generally, it's up to 35% of the $3,000 of the expenses for the one dependent, or $6,000 for two or more dependents. The third point is American Opportunity Tax Credit. The American Opportunity Tax Credit, sometimes shortened to AOC, lets you claim all the first $2,000 you spent on the tuition, books, equipments, and the school fees, but not living expenses or the transportation, plus 25% of the next $2,000 for a total of $2,500. It's also partially refundable, which means you can get up to $1,000 back if the credit zeros out of your tax bill. Lifetime learning credit. The lifetime learning credit lets you claim 20% of the first $10,000 you paid towards your tuition and the fees for a maximum of the $2,000. Like the American Opportunity Tax Credit, the lifetime learning credit doesn't count living expenses or the transportations as eligible expenses. You can claim books or the supplies needed for the coursework. Then comes the fifth point, that is student loan interest deduction. The student loan interest deduction lets borrowers write off up to $2,500 from their taxable income if they paid interest on their student loans. You don't need to itemize to take advantage of this deduction. Then comes the adoption credit. The adoption credit is a tax break that helps taxpayers cover a certain amount of qualified adoption cost per child. The credit begins to incrementally decrease at certain income levels and completely phases out once your modified adjusted gross income (MAGI) exceeds the given threshold for the tax year. For the 2025 tax year, the credit maxes out at $17,280, with up to $5,000 being refundable. The credit phases out at MAGI, modified adjusted gross income, for the two lakh and 59,190 dollars or more. The seventh point is earned income tax credit. The earned income tax credit is a refundable tax break for the lower taxpayers with and without children for 2025. The credit ranges from the 649 to 8,046 depending on how many kids you have or your marital status and how much you made. Charitable donation deductions: if you itemize, you may be able to write off the value of qualifying charitable gift, whether they are in cash or the property such as clothes or a car, from your taxable income. Per the IRS, you can generally deduct up to 60% of your adjusted gross income. Medical expenses deduction: in general, you can write off qualified unreimbursed medical expenses that are more than 7.5% of your adjusted gross income. For the tax year deductions for the state and the local taxes, you may deduct up to $40,000 for a combination of the property taxes and either state and local income taxes or the sales taxes through a tax break known as the SALT deduction. Mortgage interest deduction: the mortgage increase interest tax deduction is touted as a way to make home ownership more affordable. It cuts off federal income tax that qualifying homeowners pay by reducing their taxable income by the amount of the mortgage interest they pay. Then gambling loss deduction: gambling losses and the expenses are deductible only to the extent of the gambling winnings. So, spending $100 on lottery tickets is not deductible unless you win and report at least $100 too. You can't write off more than the amount you win. IRA contributions deductions: you may be able to deduct contributions to a traditional IRA, though how much you can deduct depends on whether you and your spouse is covered by the retirement plan at the work and how much you can make. 401k contribution deductions: the IRS doesn't tax what you divert directly from your paychecks or into traditional 401k. In 2025, you can contribute maximum of the $23,500. New in 2025, people who are ages 60, 61, 62, and 63 can add up additional $11,250 for a total of $34,750. These retirement accounts are usually sponsored by the employees, although self-employed people can open their own 401k as savers credit. The savers credit runs 10% to 50% of up to $2,000 in contributions to an IRA, a 401k, a 403b, or a certain other retirement plans. The percentage depends on your filing status and the income. Health saving account contribution deductions: contributions to the health saving accounts are tax deductibles and the withdrawals are the tax free too, as long as you use them for the qualified medical expenses. Self employment expenses deductions: there are many valuable self employment tax write offs for the freelancers, contractors, and other self employed people, including tax break for mileage and business insurance premiums and the business meals and travels. Home office deduction: if you use your part regularly and exclusively for the business related activity, the IRS lets you write off certain home office deductions for the associated rent, utilities, real estate and repairs, maintenance, and the other related expenses. Educators expenses deductions: if you are a school teacher or other eligible educator, you can deduct up to the $300 spent on the classrooms supplies. Spouses who are both the educators and filing jointly get a deduction of $300 each, making them eligible to claim up to $600 on their turn. Electrical vehicles and tax credits: however, taxpayers who purchase eligible cars by September 30, 2025 may still be able to snag a credit on their 2025 tax returns. Eligibility depends on number of rules, including income, price of the vehicles, and whether the car meets the IRS manufacturing guidelines versus the qualified EVs. So hope this topic will have been beneficial for you. So do subscribe the channel for more videos. Thank you.